All right. Thanks for having us. David Brown, Sierra Pacific Mortgage. Y'all know Jessica. She's our processor, makes everything run, and makes us look good. So thrilled to have her with us. And she's going to chime in on some things we talked about this morning. And then Andy Mason's with us. We're super excited to have him. Andy joined us a week and a half ago. Passed his mortgage test the first time. Moved here from Florida by way of Wisconsin, and super excited to have him.
Let's walk up there and camera you.
Yeah, come in the camera.
Sure. Yeah.
I present to you Andy Mason.
Hello.
Equal housing lender. Andy is a loan officer. I thought it would be helpful for him to just kind of hear and meet some folks and just kind of hear the lingo and that sort of thing. So super excited to have him. And as a reminder, we're just down the road on Oakland Avenue. We're going to have a kind of a Thanksgiving drop-in. We'd love for you guys to come and pay us a visit on the 15th, and so we'll leave some of these flyers for you guys. 15th, 5 to 7:30 drop-in. We'll have food, drinks. We'll have some door prizes. So just a time to kind of see our office, meet our folks, and just hang out. So it just show appreciation to you all too. That's really the main goal, is to say thank you for your support. That's all we do this year. So every time we do this, I think, man, I need to do a better job of asking what's on your guys' mind, because that's really what I want to talk about. I mean, we can come with a list of things that we want to share, but at the end of the day, we want to know what you're seeing so we can better help support you guys. So some things, as I've kind of reached out to some of you guys that came up. One, what's our process? Like, what, from just a basic level, how does this all work once we get a client and a contract? How's the sausage made, so to speak? Because I think that's a great question. When we start out with the client, what does that look like, and what can you guys expect as far as like getting updates and the timeline of all this? So I thought I'd just kind of walk through that a little bit. Generally, our first client touch is when they're sent from someone like you guys. They're referred to us. They're either starting the house buying process, and we get pre-qualified or pre-approved, or they found a house and they've got to get the ball rolling. So we would obviously prefer to start that process before they found a house, which gives us time to really vet them. And I think I talked about this last time. Our company we started formalizing the pre-approval process to where we can really dig into the underwriting, so that so we don't run into something like we did with our client here recently, Matt. Because when we pre-qualify someone, we're running their credit, so we know what that looks like. We're asking them questions around their income, their source of funds, where those are coming from for down payment, closing costs, etc. But generally, when we issue a pre-qualification, that's kind of the extent of what we're vetting. All right, so we know their credit. We have an idea of what they make from what they tell us. We have an idea of what's in the bank from what they tell us. And there's some technology we can leverage to substantiate that. And we do when we can. If they're W-2, if they work for a company that uses the work number or the Veritax thing, we can do that. And that's a click of the button, which is always nice, but it doesn't always happen. We have a really cool program called Finicity, where we hit the button and it verifies. You can send them a link to verify their assets. So if they have funds coming from a bank that participates in that, Eastman Credit Union would be one that doesn't, but most of the other banks do. We can verify their bank account information. But a lot of times we can't do that. Or if there's gift funds involved, or if it's a 100% program, we have to get those documents. So generally, when we pre-qualify someone, we're sending them the letter and saying, "Hey, congrats, you're pre-qualified." Our next step would really be to pre-approve you to where you're approved pending your ability to find a house. And that's when, when I'm sending that pre-qual letter, I'm copying Jessica on it, and Jessica's then reaching out and saying, "Hey, she's reviewing the application. Based on your situation, we're going to need, all these documents, in order to formalize your pre-approval. And then we're kind of at the mercy on them getting to us what we need. A lot of times, if there's not a house involved, there's really not there tends to not be a sense of urgency. So, but we'll still, you'll follow up with people till they either send it.
2 days.
Hurry, help us. Right. So we're gently pressuring them to get us what we need, because until we have it, pre-qualifications, as good a job as we think we might be on the front end, sometimes what they've told us isn't what is. So that's the reason behind that. So we get that in. Really, the next thing in all this process is we get the contract. So we're getting the contract, we're matching it up to our application, we're filling in all the blanks, and then Jessica's then moving forward with sending out the initial disclosures. So our goal is to get those out to our clients as soon as possible. Right now, we tend to lock the rate on the front end. We're not letting loans lock, because in general rates have tended to be creeping upward. So when we send that initial package to them, oftentimes it has a locked rate on there, so they know what it's going to be, they know what their payment's going to be, and then it's just up to them to e-sign those documents. I tell them all the time, hey, if you get into this, have questions, call us, we'll walk you through it. Most of the time they just click, sign through, and off we go. At that point, within that package, there's a real critical document for us. It's called their notice of intent to proceed. So it's them saying, hey, I want to move forward with you all, and they're signing that document. That document allows us then to order the appraisal. So until they sign that, we can't order the appraisal. As soon as they do that, it comes back. Jessica's then sending the link where she's ordering the appraisal through our AMC, our appraisal management company, and then they're sending it out, or do you send out the
I'm
link?
gonna send it out.
So the AMC sends the credit card, debit card link to the borrower to go ahead and pay for that appraisal. Appraisal costs tend to range from $495 on a conventional to $550 on an FHA, maybe.
Yeah.
USDA. We're seeing some in more rural areas. We have one in Sneeville with that cost. That came back a little over, I think. It's like
area.
70 some acres too, I
Yeah.
think. So a lot of acreage, multiple structures on the property, a barn, and some
And there's
things.
not a lot of appraisers that work in areas like that. You have to have certain qualifications to do each county, and that's what we start having there.
Yeah.
Okay.
So y'all make the buyer pay for the appraisal before?
Yes.
I like that.
Yes.
And that way, if
Yes.
there's a delay, it's in the buyer's court.
Right.
Mhm.
Right.
Yeah, because an appraiser won't go out to do the inspection until they've had a payment on it.
Yeah.
That way it doesn't incur any extra liability for you guys.
Right. Back in the day, lenders would collect credit report fees too. We don't do that. We just kind of eat that if the deal falls apart. The appraisal with some of the borrowers who are marginal with funds they have on hand, it also helps because they can put the appraisal on a credit card, as opposed to having. So that's they look at the closing costs and it's like, well, 500 of this will come off because you've already paid it, and so they have time to maybe pay that off down the road. And then, let's see, Jessica's also doing title order
Yeah,
immediately.
title order right then, and I do verifications of employment then.
Yep.
Because some of them take a little bit of time to get back, so I want to get them ordered ASAP.
But don't forget to summarize some of that, in case the
So,
people watching
yeah.
can't hear what she's saying.
Right, yeah, so Jessica will also do verification of employment. Sometimes that can take some time to get that back. What else did you say?
Just the title order.
Title
So that
order,
we're
yeah,
getting things
yes,
right,
yeah. Go ahead and send the title order to the title company, get that rolling. What else? Something else I was gonna say. There we go. What other order do you
But
need?
that's it. Those are the only three.
Oh, transcripts, tax.
Yeah, sometimes.
Sometimes we
Yeah.
have to have.
But normally what I do at that point is I look through and see what documents I already have, what might be missing. I'm checking through bank accounts to see if there's anything weird, anything I need to check into. So we can try to get to the bottom of them right up front before I get over to underwriting.
Do you have the buyer obtain their own transcripts, or do you pull those yourself?
I usually pull them myself.
Okay, that's fine.
They were taking a little while to come back, so sometimes the buyer would have to do it, but they get it pretty quick, so I just usually do it myself.
it's always nice when they can do it, or when we can do it. Now on, is it corporate returns? They can't.
Yeah,
Okay.
yeah.
So and certain loan programs, the borrower is not permitted to get them themselves, which like some of the jumbo programs.
But I just ordered one maybe 2 days ago, and it already came back this morning. So the turnaround time's got really quick on. Yeah.
Dustin Walton Weldon, Taco Bar in the.
I just came here for the information.
Oh.
Y'all were out for the stickies too.
So at that point, you know, and as soon as we get, what would you say? What percentage of information do you usually get before we send it into underwriting?
I try to get as much as I can.
Right.
Yeah.
Okay.
I try to get everything that I would need, or even possibly think that I might need down the road. Because I feel like that's when a borrower's going to be more willing to give it to me.
Yep. And the more complete a file we send to underwriting, the shorter the condition list that comes back that we've got to go back to them for. So the file gets sent to underwriting. That's the push of the button.
Yeah.
Underwriting gets it these days. Turn times are
2 days,
couple days. You know, 99% of the time we're getting back what's called a conditional approval, and it's always a conditional approval because even if there's something that could be a problem, it's proof conditional upon this being resolved. So that's just standard. So when we tell borrowers, hey, we got your conditional approval, sometimes they think, oh, I'm conditional, like what's wrong? Like, so no, this is typical. There's always something that we still need, whether that's the appraisal, title work, etc.
Insurance, all this stuff.
Right. So our goal is to be so thorough on the submission that when we get that back, that list is very short to where we go back to the borrower it's for 2 or 3 things.
And normally that kind of eliminates finding a lot of weird issues down the road.
Yep. So then Jessica would reach out to the client, or I would probably, usually I'll say, hey, great news, we got you approved. Jessica's gonna be in touch with anything we need, any remaining items we need. So she'll send an email. She'll kind of digest that condition sheet, pare it down, parse it down to just.
Yeah, I try to explain it a little bit better. You know what I mean? To explain to borrowers why we need it, not just I need A, B, and C. Because I don't want to go back and forth.
And that's okay.
Yeah, I want them to know exactly what I need, exactly why I need it, and then it kind of makes a little bit more sense for them.
It makes the experience a lot better for clients. I've seen, if you've ever seen a conditional approval from an underwriter, it's not the prettiest thing. Like their verbiage, and I've seen processors in the past actually like almost cut and paste it. I'm like, no, like client is that they don't want to see that. Their blood pressure is going to go up in seeing that. So Jessica does a fantastic job, really explaining it, condensing it down to where it's not this big list of things. So we're staying on them to get it back to us.
Yeah.
In the meantime, we're waiting on title, appraisal, any other things that would be part of the process in terms of what we're waiting on. What am I missing?
I mean, I feel like the process is kind of simple. It just requires a lot of legwork. You know, there's not really a ton of things, but sometimes it just takes some time.
We're seeing appraisals come back,
Quick.
7 to 10 days?
Yeah, probably. I mean, it's definitely less than 2 weeks, I would think.
Yep. Even VA appraisals we're seeing come back within, less than 2 weeks.
Have you had any issues with those? Not?
Yes.
Okay.
We've had several appraisals, not just VA. We've seen several appraisals recently come in low, which has resulted in renegotiating the price. We lost one recently. Sellers weren't willing to budge.
It was an FHA flip, so we had to have 2 appraisals.
Right.
And the first and the second were very different numbers.
Right.
Yeah.
The first one was low. The second was even lower.
Yeah.
And then you have to go by the lower.
Go by the lowest. Yeah.
So,
Dang.
and that's an appraiser who's been around for a long time. He at one time appraised my house. I personally never had any issues with him. It's just.
Why do you have to have 2?
So with an FHA, if a buyer is buying a house with an FHA loan, and it's a property that has transferred ownership within the last 6 months, one, you can't do it as an FHA if it's been within 90 days. So if it's between 90 days and 6 months, you better have 2 appraisals.
That's
If the-
ownership or if it's been flipped?
Ownership.
If it's
Well-
if the values went up over 100%.
Well, didn't we see that if there was a quick claim in that time, that counted? I think
On one of them, yeah.
on one of them, yeah. So it's really ownership.
I didn't realize it was up to 6 months, I thought it was just 90 days.
180 days, and it's by the contract date. So if your contract is, like this one was at 170 days.
Wow.
Like
Yeah.
if it would
Yeah,
just
not the
been-
closing day,
Yeah,
but the contract day.
Right, right.
Now it can be done. It's just
Yeah.
that second appraisal has to be done, and the borrower's not allowed to pay for it. So I think we absorbed the cost.
Yeah.
Yeah. So 500, whatever that is. Yeah, but and you have to go by the lower appraisal. So seems like you could just take an average of 2, but no less. What else? Appraisals. Title
When you
works.
have people coming from out of state, like moving from out of state, and they're just, like looking, they wanna move here, but they haven't found a job here yet.
Mhm.
How does that work as far as like looking at, and I think I know a little bit about it, I just wanna be sure.
Yeah.
But like, how does that work as far as like looking at their work stuff? Like if
Right,
they are
PTI,
still gonna
right.
get a job here,
Yeah.
but they haven't gotten one
Right.
yet, how do
Yeah.
you qualify them?
That's a good question.
Before you answer.
Let me repeat that question. Can I repeat that question?
Yes.
So great question. So you have an out-of-state buyer or out-of-town buyer coming here. Maybe they left their job already or don't have a job yet. How do you work with that person to qualify them for a mortgage? Is that pretty
Yeah.
much? I had a couple just the other day. Left their job, burned the ships. I mean, they're coming. Don't have a job, but we pre-qualified them. They felt like they were going to be able to find something in pretty short order. I think they had jobs that tended to be in high demand. I think one was like a dental hygienist and one was a office manager or something like that. And so the conversation was, hey, obviously we can't do anything until you find a job. But if you feel like your income is going to be comparable to what it was, or I think that was their thinking. They're thinking, we expect to be able to make what we were making. We're very similar. So the conversation was, hey, obviously you can't do anything now, but assuming you do find that job, here's what we can pre-approve you for. With most programs, if they've got a contract or an offer letter, an agreement to start, we can use that offer letter as their income verification, along with doing a BOE, I suppose, without them having to be on that job for a length of time.
Right, gotcha.
So, but I hesitate to do that, but at the same time, I feel like if I'm clear with them and they understand that, hey, obviously this is pending your ability to find a job.
Yeah.
And they're like, well, we don't want to buy a house, we don't have a job anyway. So it's like, okay, well, there's still people out there who probably try to beat that.
Yeah.
But, does that
Yes,
kind of
okay.
answer the question? Okay. Now with, and I think with USDA, you don't have to have a first pay stub. I don't think so. Now we do have to be conscious of job gaps. Like with FHA, I feel like it's 6 months. If there's a job gap of 6 months or more, they have to be back on a job for 12 months? I believe so. Yeah.
And with independent contractors, they have to have the same for 2 years, is that correct?
Yes. Yeah. They're essentially self-employed. Yeah. So little nuanced things like that.
If they are a firefighter and they're moving over here and they have a job lined up that they're not going to be a nurse, does that start them over? It's not the same line of work, or
Doesn't start them over. Now, are you talking about a 1099 like a travel nurse or a W-2?
no? Say they're just whatever world they're in. We're right here. They're a nurse, but they are whatever. They're a firefighter. They've always wanted to be a nurse. They get that nurse job.
Yeah.
Is there a time frame or
Yeah.
starts over since they've switched to different career paths?
That's a great question. So the question is Karen, if they change careers essentially from one to the next, there's no issue with that. We just have to be able to document 2 years of history.
I don't normally have to get a letter that says why you changed career paths.
Yeah.
Hypothetically.
Because I wanted to.
Bruce Wayne,
Yeah,
he switches jobs.
right. Yeah, great
He's an old.
Hey, you decided you want to go fight crime in the middle of
Bruce
the night.
Wayne pays cash, I thought. Now, there was a change or some clarification we found recently. Jen sent out something about you can actually use high school education. Did you see this?
Oh, yeah.
High school education for FHA. So let's say they're coming out of high school, they get a job. You can use that high school education as part of their 2-year history.
Wow.
Yes. So it's not just.
a certain grade point average?
I got graduated. D for diploma, right?
What if they went to summer school to get their diploma?
What about a GED? I don't know, but that was kind of cool to see. Yeah.
Does that have to be in the same line of work? Like if they're studying to be a, if they're studying to be a, let's stick with the nursing thing. They're doing some like college credit stuff or whatever in high school. Then they jump out into the business world, but it's guaranteed hours. Does that go, or does it have to be? I did some business classes in high school.
I don't think. I mean, from what we heard, what the classes they took in high school don't really matter.
Yeah,
I mean, you know,
it didn't really have a lot of details, just that you.
yeah, gym class.
Yeah.
Pickleball.
Yeah.
So, anything else in that vein? What do y'all have a question about VA loans? Can you buy a house with a spring or well as a water source? Yeah, absolutely. Now there's going to be a water test required. You got to test it. You can go to the CDC website. There's different requirements they're looking for. And you can't have over a certain level of nitrites and nitrates and all that kind of stuff. Yeah, they can be done. It's just now it used to be you had to have the systems inspected, like the well system, the septic system. You don't have to do that now unless the appraiser notes evidence of something quirky with them. So, but the well test, the water test is still a thing, and that's what $150. Usually not a big deal.
Yeah, the UV treatment systems aren't too expensive either. I think you've got like a well or something like that.
Yeah. I can't remember who asked that question. Did that answer the question? Yes. Was that you? I think that was right. And then I think, did you ask about the water stuff? Yeah, did you hear that?
No, I did not.
Water test.
Way to go,
Watch
bro.
the video.
I had to answer a question from
Yeah.
another agent.
Sure. So water tests are required on VA,
That's what I thought.
on a well or spring. The systems don't need to be inspected, like for septic or water, unless there's the appraiser notes something that's kind of like now VA requires termite, but other loans don't require it unless the appraiser sees evidence of activity.
I know when they were going to use USDA. I think when they did use USDA when the fall, they had
Yeah,
water tanks.
right.
Eastman requires.
Eastman requires a water
Termite.
a termite for every property. Really?
Yeah. It's
Okay.
unlike conventional too, you have to have a termite done.
Really?
And it has to be fixed before closing.
Yeah. Well, I mean, So, one of the questions, I know we're going along here. Is that time?
We're good.
The reel's still rolling. A lot of consternation these days with buyers who need financing about the high interest rates. Right now, 30-year fixed is just over 7% on a conventional loan. That's just kind of your starting point, and then you have loan level price adjustments if the credit's lower or it's multifamily or whatever. Yeah, there's definitely interest these days. I'm finding the rate. I mean, this is a daily conversation we're having, right? Like, do you buy the rate down when we think rates a year or 2 years from now are going to be lower? And I think everyone kind of has this feeling that rates next year, the year after, are going to be better than what they are now. You look at how rates track, and they tend to follow inflation. So as inflation starts going down, you'll see rates go down. with the way the Feds are raising rates, I think that's just, it's gonna happen. It's just when, right? In the meantime, people aren't excited about a 7.25 rate, so what can you do to lower that, make the house more affordable? There's discount points. You guys may have heard chatter about the 2-1 buy down. Have anyone heard of that? 2-1 buy down. Okay, it's the latest shiny object in the industry right now because it allows a borrower to have their rate start out the first year be 2% less than the note rate. Okay, so if the rate would be 7%, they start out for the first year at 5%. The next year it would be 6%. It'd be 1% lower. So it would start 5, then 6, then it would go to the 7.
Would it go above 7 at any point?
No. But we have to qualify them at that 7%, at the note rate. So they have to be able to qualify based on that.
But if say you did that, but then in 2 years or so, interest rates are back down, and then that third year you have to pay your 7.
You can
You still
refi.
have to pay. Okay. I don't know if you're restricted in that way because you did the 2-1.
No, there's no. It would go to the 7%, but you could refi out of it.
Do
Okay.
you have to stay in it a certain amount of time before you could refi in that
I
rate?
don't think so. No, I don't think so.
Sweet.
Now there's some extra costs involved, and what all the training we've seen so far is there's different ways you structure it. It's most of the time seller concessions are involved, so the seller credit will help pay the cost to get that 2-1 buy down because there is a cost. It's not structured the same way as like a discount point, but there's a cost to it based on there's a formula for it. We're learning about this because actually our company tonight will be updating our system to where tomorrow. I was hoping that we could have access to it before today, but tomorrow we'll be able to price it. So yeah. So
Is there an amount that the seller concession, like the seller can help with that? Like
I think
how
it's
much?
just so the question is there an amount the seller can help in seller concessions to help cover the cost of that? I think that it's just going to be based on the normal, typical loan program type. So if it's conventional and they're putting less than 5% or less down, then they're limited to 3% of the loan amount. Loan purchase price. Purchase price.
Yeah.
FHA allows up to 6%, USDA 6%, VA was 4% if they're doing 100% financing, I think. So all that kind of stays the same. So are y'all starting to see more seller concessions? A little bit? Yeah.
Yeah.
It's starting to be, price reduction of seller concessions, days on market.
Right now, I can't think of the deal,
Yeah.
Right.
I've seen some too. I just had one that we raised the purchase price to cover their closing costs, and we put it in the verbiage that if it didn't appraise for that, we'd renegotiate, but it appraised for it, so she's still netting what she would have. But
Great.
she paid like $9,000 in their closing costs, so we just structured it that way.
Yeah.
That's good.
Yeah, because that's the risk you run there is the.
I was like, we're not just putting that in there. We're gonna make sure it appraises for that, and then we'll talk about it.
Yeah, for sure. Yeah. Well, we're seeing signs that the buyer's side is improving a little bit. That's encouraging because it's been depressing trying to help buyers. It just hasn't. I mean, I feel for them. You know, we had one go into contract from a past client last year who the dad did his loan in November. It was right at a year ago. I look back and he got a 3 1/4 or whatever it was, and he referred his son and daughter-in-law. They went into contract, and in the course of conversation, they said, you know, this is a couple $100,000 house. They said, you know, a year and a half ago we were looking at $400,000 houses, and just affordability has
Dang.
just completely changed that. So it's unfortunate.
Yeah, it's a lot of money.
Yeah, and then rents are up too. So if you're a renter. Get a lot of calls from renters who are like, hey, my landlord's raising rate next month. I really want to get out of the situation. So, interesting times. But we're here to help. Any other questions? I know we talked about discount points a little. Yeah, discount points where there's just this tension of, hey, I want to drive my payment down at the same time. That's kind of like lighting money on fire when rates should be better in the next year. You know, so you can stomach a little higher payment now, minimize your closing costs. Refinancing will probably make a lot of sense in a year or two. The government loans too are nice because you got the streamlines. You all heard of that, the EARL, the VA EARL, interest rate reduction loan. No appraisal, no income verification. Very minimal closing costs. You have a VA client who's, you know, you probably would encourage them not to buy that rate down much for that reason, because their streamlined refi is so easy, so inexpensive. So that's a wonderful benefit to veterans get. And then there's the FHA Streamline and the USDA Streamline, which have a little more requirements, but it's still pretty easy to do. So that's the constant message these days. I know you don't like the rate, but this is not you're not locked into this for 30 years. You know, you can refi. Thank y'all for having us.
Thank you.
Thank you.
All right. That's a wrap.